From the moment a customer clicks buy to the second that cash actually hits your bank account, there's this really complex journey happening behind the scenes. We call it the order to cash cycle, or O2C. And for a ton of businesses, it's a mess. It's filled with manual steps, delays, and errors. So today, we're going to break down how automation is completely changing the game for this critical financial process. All right, here's our game plan. First, we'll dig into the problems with the old school manual process. Then, we'll introduce automation as the hero of the story. After that, we'll walk through the new, slick workflow step by step. And to wrap it all up, we'll look at the huge business impact this can have. Okay, let's get right into it. Section 1 is all about that manual order to cash process. And really, the core issue, the thing that causes all the headaches, is the problem of disconnected systems. So just to make sure we're all on the same page, what exactly is order to cash? Well, it's the entire process, every single touch point, from the moment a customer says, "I'll take it," all the way through to collecting and applying their payment. It's the whole shebang. Now, this whole cycle is built on a few key parts that have to work together perfectly. Think of them like Lego bricks. You've got your customer data, then order processing, billing, collections, and finally applying the cash. But the thing is, if one of those bricks is wobbly, the entire structure can come crashing down. So in a manual world, what's holding this fragile process together? First up, everyone's favorite tool, email. Approvals, questions, order details, reminders. It is all happening in these chaotic, siloed inboxes. It's nearly impossible to track anything with any kind of certainty. And then, of course, you've got the endless spreadsheets. Oh, the spreadsheets. Teams are manually tracking customer accounts, logging orders, and keeping these huge lists of overdue payments in files that are probably full of errors and are totally out of date the second you hit save. And right here, this really shows you the fundamental problem. The whole thing is just a patchwork quilt. Your sales system doesn't talk to your billing system, which has no idea what your finance system is doing. It's just a bunch of disconnected tools held together by pure manual effort. So what's the real cost of all this friction? Well, you get delayed billing, invoices going out with mistakes, and almost zero real-time visibility into your cash position. And all of this drives up a really important metric called days sales outstanding, which is just a fancy way of saying it's taking you way too long to get paid. But you know what? It doesn't have to be this way. Let's move on to our next section, introducing automation. This is where we pivot from that chaotic past to a much more structured and predictable future. This slide just lays it out so perfectly. You're literally moving from a process that is fundamentally disconnected, inaccurate, and always delayed, over to a system that is structured, predictable, and accurate by its very design. It's a night and day difference. And this quote really hits the nail on the head. The goal here isn't just about being a little bit faster. It's about creating a reliable system where you can actually remove the guesswork. The entire process becomes something the business can actually depend on. Okay, so what does this new automated world actually look like? That brings us to section 3, the automated workflow. We're going to walk through a step-by-step transformation of each of those stages we talked about earlier. Here are the 5 core pillars of the automated cycle. It all starts with standardized onboarding, then it moves to guided order processing, then to instant invoicing, followed by automated collections, and it finishes strong with AI-powered cash application. Let's break each one down. So everything, and I mean everything, starts with good data. In step 1, automation makes sure that customer onboarding is totally standardized. The system validates everything right from the start: credit terms, billing addresses, tax info, getting rid of those little data entry errors that cause so many huge problems later. Next up is order processing. So instead of a person having to manually look up pricing, automated workflows just take over. The system applies the correct pricing rules, the right promotions, the right contract terms for each specific customer every single time without fail. Now, as soon as the goods are shipped or a service is marked as complete, we hit step 3. An accurate invoice is generated and sent out. Instantly, that painful lag time between delivery and billing, the one that just kills your cash flow, it completely disappears. Gone. All right, let's talk collections. Instead of it being this reactive, manual chasing game, it becomes proactive and automated. Workflows are constantly tracking due dates, sending out polite reminders automatically, and they can even escalate high-risk accounts to the right person before it becomes a real problem. And for the final piece of the puzzle, getting that cash recorded properly. This is where AI-based logic is a total game changer. It can automatically match the payments coming in with the correct open invoices, even when the payment info from the customer is messy or incomplete. It's all about closing that loop fast. Okay, let's move into our final section and see how all of this adds up to a real strategic advantage for the business. We've seen the how, but now let's really focus on the why. What is the actual business impact of making this change? This chart breaks down the 3 biggest wins. First, you dramatically reduce revenue leakage. That's money you are losing from things like incorrect pricing or just not billing for something. Second, cash flow gets a huge boost because you're getting paid faster. And third, you finally get that crucial, real-time visibility into exactly where your money is. So the bottom line is this: the process itself is fundamentally upgraded. This isn't just a small tweak. The entire order-to-cash cycle becomes demonstrably faster, way more accurate, and completely transparent for everybody involved. And all of this rolls up to support 2 of the most important goals for any business. First, you get stronger working capital, which is basically the cash you have on hand to run your day-to-day operations. And second, you build better customer relationships. Because let's be honest, when your billing is always perfect, you can focus on what really matters. And that leaves us with one final big question to think about. After seeing what a structured, automated process can do, it really makes you wonder, doesn't it? What is the true hidden cost of all that manual friction that might be slowing down your own order-to-cash cycle right now?